Did you happen to catch that video that was put out by Yahoo Finance the other day? See, they interviewed this gal, Meredith Whitney of Meredith Whitney Advisory Group CEO, and her company actually has a distinct position and extensive knowledge that enables her firm to deliver forward-thinking plus impartial and timely investment analysis to her clients. And her insight on the housing market nationwide is really eye-opening. She is making some bold predictions about what needs to happen in the coming months and years so buyers feel more confident about stepping into the market. And we're going to take a look at what she says and compare that to the insight that we're experiencing here in Southern California, well, San Diego specifically. There are some similarities, but there's also some differences. Starting with the big financial news for the month of September, mortgage rates are expected to continue to ease because the Fed started cutting the rate cut cycle that's planned to roll through 2024 and into 2025. Keep in mind these plans, they're not set in stone, and things can change at any time, as they often do when it comes to the government and money. The interviewers lead with the idea or hope that rate cuts mean that home prices will actually come down. Meredith is spot on in her answer.
Well, there are two things. I don't think rates are low enough to really get the market moving. I think rates need to come down by another 100 basis points to really spark interest. And then there's a two-step process, which prices have to come down by our estimates, 15%, at least 15%, to make housing, even the carrying cost of a mortgage tolerable. So you've had, over the past 4 years, you've had the carrying costs, principal and interest, double, on top of housing prices go up about 40% nationally. So the combination of the two have kept a lot of people out of the market.
Here in San Diego, we're already one of the most expensive markets in the country. If we were actually to see what she suggests, a price decrease of 15%, San Diego's average sales price of $1,365,760 last month in August would be decreased by $204,864, making the average sales price at $1,160,896. Now, the interesting thing is that we've seen a flattening in the market in some areas of San Diego. And I repeat, this is not across the board. Price reductions have been on the rise since midsummer. And we have 31% of listed homes having reductions this week. So if you are looking to buy a home before the end of the year, you're actually in a really unique place where the right home and the right negotiations could get your family a really good deal. Both price and terms are in your favor. And that is a golden opportunity for buyers right now, one we haven't seen since before COVID. We're also seeing the median list price slip from $1,350,000 at the beginning of June to $1,250,000 as of Friday, September 27th. It's not hardly 15%, but it is a step in the right direction, especially when you couple that with our average days on market increasing, now at 75 days. Gone are those days of listing a home on Wednesday, holding it open over the weekend, and responding to multiple offers on Monday. Yes, on some well-priced homes in hot markets, we do still see that occur, but it's also that more homes are sitting and we are seeing less activity at open houses, and it's just taking longer for properties to sell here in San Diego. If you're a buyer right now, put yourself in a seller's shoes. 75 days on the market, a couple of price reductions later, and you're heading into the holidays, a typically slower selling season. Ooh, see why I'm saying to our buyer clients that you are in a unique situation. You should take advantage of the market conditions because we just really don't know how long this is going to last. Her next comment was a bit of a surprise, which would be a welcoming surprise for folks here in San Diego County.
So one thing will be for sure, lower rates will have more people able to afford to get into the market from an affordability, but housing prices have got to come down. And then the other issue is once housing prices start to come down, you'll see more inventory come to the market. there'll be more that'll be more pressure on home prices. And I think one of the reasons that home prices have gone up, have not gone down, is because there's been a demand supply imbalance. Too much demand, not enough supply. And what I believe will happen is you'll start to see more supply come on the market, and that'll pressure home prices.
And why do
That's a good thing, because if home prices go down 15%, you just normalize back to 2021 level. That's healthy.
Why do you think, Meredith, more supply is going to hit the market?
Because I think there's been, a lot of people in rate lock, and they haven't wanted to sell their home because to buy a new home, unless they're going to buy with all cash, their carrying costs become more. They're downsizing, but they're paying more, and that's not attractive to a lot of people. So I think a lot of people have held their homes off market, and I think that there's going to be there's got to be, like, the levee's got to break at some point.
How, in theory, will this play out in San Diego? Well, we've had ridiculously low inventory here in San Diego County for so long. It's been the number one driving factor for that double-digit appreciation. As we've seen over the past several years, back in December of 2021, you had just 2,575 properties on the market. And that's for a county of over 3 million people. Not nearly enough properties on the market for that buyer pool. Now, as of last month, you're at 5,262. Double that low we saw back in 2021. See, in San Diego, you have higher home prices, add higher interest rates onto that, and we end up with what we call a lot of fence sitters. Folks who are waiting to buy because they are waiting for something to give. Local experts who are way smarter than I am say that once mortgage rates drop, we may actually see another uptick in home prices. So, you fence sitters, you may miss your chance once again. You'll have more buyers in the market, creating less supply and more demand. Guys, my dad always tells our clients, it is never the right time to get married, start a new job or business, have a baby, or buy a home. But guess what? You do it anyways. Ask any of our clients who bought a home in the last 5, 10, or even more years. Ask if they wish they would have bought 2, because property values tend to double here in San Diego every 7 to 10 years. So if you can afford it, get your foot in the door now. Back to the interview. Meredith then drops the statistic that over 60% of homes are owned by people over 50.
Over 60% of homes are owned by people over 60. So there's a big issue in terms of over 50. So there's a big issue in terms of all the housing stock is owned by old people. And so it's harder for young people to get in, to get in. But it's gotten increasingly expensive for these older people to stay in their homes because property taxes have gone up dramatically, as has homeowners insurance. That very persistent services part of consumer spending continues to go up, and the cumulative effect of that is really straining for a lot of people. So in fact, people over 60 have actually increased their debt levels faster than any other demographic. So you can see there's real strain in the system. And I think that much more will cause people to, even if they want to stay age in place, they'll have to downsize.
The interviewer asked about the median U.S. home price versus household income. And that ratio is hitting an all-time high at 7 times. And she wants to find out how to get that number reduced.
Well, I'm glad you mentioned that. One suspicion that I have is if you look at the data from the National Realtors Association, you can see the most activity has been with the highest priced homes. So I think that data is a little skewed. So where there hasn't been a lot of activity has been in homes that are, let's say, under 300,000, and so that skewed all of the numbers to look less affordable. And from our math, if you look at homes versus homes to households, the U.S. actually doesn't have a housing shortage. It's just there's a housing shortage about where in areas where people want to live. There are plenty of houses in upstate New York. There are plenty of houses in western Pennsylvania. There are plenty of houses in other parts of the country where people don't really want to live. It's a question that everybody wants to live in the same areas, and there's a shortage there. But to really get things moving, you're going to have both the low end and the high end of the housing market start to move.
So this interview, it finishes off with a political question about the housing promise of 3 million more homes from Kamala Harris.
I think that's going to be a frustrating move for any politician because you don't get the immediate benefits. So that's a long-lived project, and it's probably necessary. But a lot of real estate decisions are done at local levels and are not done at federal level. So I think that's ambitious, and it probably won't happen if she's elected during her administration.
Back here in San Diego, that struggle is real. We've been talking about it for years. They just are not building enough homes, especially affordable ones. But that's another video for a whole nother topic. The important thing to understand is our lack of housing fuels that imbalance of supply versus demand, driving prices higher. Now, remember that stat. Prices tend to double every 7 to 10 years here. Once again, now is the time to get on that ladder of home ownership here in San Diego while you still can, before you actually get priced out of the market. And if that is your goal for you and your family, reach out to us for a one-on-one consultation, whether it's actually here in San Diego County or anywhere else in the country. We'd love to help people like you realize their dream of home ownership, and we really look forward to talking with you soon. Bye now.